Hey guys, welcome back to another week of Mortgage Matters in Minutes. Again, I'm your host, Brent Rasmussen, and this week is coming to you just a little bit day late. Activity has really picked up here this week, and we were crazy busy, so we just pushed it off a day to give you our Mortgage Matters in Minutes weekly update. So today, we get this question nearly every single day, and the question comes up is that I don't want my credit score pulled. It's going to lower my credit score because they're getting lots of information as consumers now on the internet and from free different credit sources that state, hey, you've had these credit inquiries, your credit score is lowering. So today we're going to explain a lot about credit inquiries. We're going to explain about the different scoring models that exist. And actually the biggest part of this video here at the end, we're going to talk about deduping and what deduping means in regards to applying for a mortgage, car loan, things like that as well. Obviously, this video, because we do home loans, is going to gear more towards you purchasing or refinancing your home. But that's how we're going to address most of the credit is in regards to a mortgage. But some of this still does apply when you get your credit inquiry pulled when it comes to a credit for cars or credit cards or student loans. I can tell you here in the last few years, I've gotten this phone call every single day. I don't want to fill out an application yet. I don't want my credit dinged. I don't want this to happen or that to happen. And then we go on to ask why, and the consumer state, well, hey, I've read and noticed that this is going to affect my credit score. And then I'll go on to give this whole video presentation nearly every single day to clients to explain to them that not always is a credit inquiry going to impact your score. So let's first talk about what credit inquiries do and what credit inquiries don't. So there's two different kinds of credit inquiries. There's a hard inquiry and there's a soft inquiry. So the hard inquiries do impact your score, and that's the credit score that we need as lenders to base your loan interest rate and qualification purposes on. Nowadays, many lenders are using soft inquiries, which soft basically gives us some of the similar data, similar credit scores, but it doesn't count as a hard inquiry. So why does that make a difference? Well, because you might not be interested now in buying a house. Maybe it's next year, but you still want to see what it is that you qualify for. So we would look at doing a soft inquiry here at Mortgage Specialists. We can make that happen to make sure you're not getting that hard inquiry. But I would tell you, it's still a soft inquiry. We can't lend off of that credit report. So we do need eventually a hard inquiry to tell you exactly what can be done. So we've chatted a little bit about the hard versus soft. So what is a deduping period? We'll talk about that, but first, let's talk about scoring models. And scoring models can be very hard for clients to understand because there's different scoring models out there. The ones that we can use for the mortgage are very specific, and we use Equifax Beacon 5.0, Experian Fair Isaac version 2, and TransUnion FICO Risk Score Classic 04. Those sound like a lot of jumbling of words, and it is. It's very hard for consumers to understand. So when you are getting a copy of your credit score, read the scoring model to see where it came from. And people just believe there's 3 scores you have, but there's over 100 different scoring models that are out there. And I'm going to pull up this chart here really quickly just to kind of show you a flyer that we have put together that explains the difference between a Vantage score and FICO scores. Us as lenders use FICO scoring models. We don't use Vantage, but your free credit reports like on Credit Karma, Discover Card, American Express, your different credit and banks will send you a Vantage score because it's free to them. But we're not going to go into complete detail, but if you look at the top here, there's a pie chart there of what makes up your Vantage score. And if you look at the middle of the screen where it says FICO scores, those two circle graphs are going to look different because the algorithm for the formula on how they calculate your credit is different. So when you're getting that free score from your mail or from your phone, it's not the same score that we're going to be able to use for getting you pre-approved or getting your mortgage. There's a lot of information here. We can always send this to you to get you the facts of what's really going on, because honestly, we see this nearly every day that people have questions about why is the score that I see different than the one that you pulled, Brent? And this is what happens. We try to give them education. So once we get access to those 3 credit scores, that is what determines where we can go to get you pre-approved. So let's talk about the deduping period. What does that stand for? Deduping stands for deduplication per the credit bureaus. And each credit bureau has a window of time that you can get as many mortgage inquiries or auto loan inquiries as possible, and it doesn't affect your credit more than just one time. So let me repeat what deduping is. Deduping is basically contacting and having anyone pull your credit report as many times as possible for a mortgage or a car loan need within a certain time frame, and that counts as one inquiry. Why do they allow this deduplication period? Because they want consumers to be able to shop around for a car loan and a mortgage. Our consumers, I can tell you, are uneducated, and they feel that each time a mortgage company or a car loan company pulls their credit, that's going to count as an extra ding. But if you pull those within a certain time frame, it all counts as one inquiry. And that's what you as the consumer need to know, because if you are calling around for interest rates, putting in an application and getting the actual facts of what the numbers look like is what you want. Otherwise, we're all guessing because we don't know what your credit report or credit score looks like. So let's talk about the time frame. I've said there's a specific time frame. It's anywhere from 14 to 45 days, depending on what you need the credit report for. But today we're just going to talk about mortgage and what the time frame is for mortgage. So we do know we have three different credit bureaus. We have Experian, Equifax, and TransUnion. Generally speaking, Experian and Equifax, for mortgage purposes, you have 14 business days. 14 days, not business days. 14 days to have as many mortgage companies as you want pull your credit report, and that counts as one inquiry, okay? TransUnion gives you a little bit more time. For mortgages, up to 45 days for a mortgage inquiry to give you time frame. So generally in the past, we used to speak about this 30-day deduping window. Nowadays, it's closer to that 14 days, but it depends on what you're using the credit report for. Because generally when people are moving homes, they're also moving their communication services, their utility services. They might be moving across the country, purchasing a new vehicle, doing all these life changes. They don't want your credit to be impacted. But what they do have a reason for why they have an implication towards your credit score by having anyone pull your credit is they don't want you as a consumer to get denied from one lender, denied from another lender, denied from a third lender, and then just keep pulling it over and over and over. You've already gotten information that you don't qualify, and hopefully that lender or that institution gave you what the information is you need to fix your credit. Those are the credit inquiries that impact your score drastically. When you keep getting them pulled over and over again, that is what is going to cause you to be delayed and having a lower credit score. I can share with you, I have my credit report pulled personally over 10 times a year. With all the different things that I do with different lenders we work with and banks and institutions and our licensing, they have to check our credit to make sure we're of credit worthiness to advise you as the consumer the best possible scenario that's out there. So have we seen this each and every day? We have. I can speak on this till I'm nearly blue in the face, but do know you as the consumer, if you are shopping around for a mortgage within a 2-week time frame, all of those inquiries count as one inquiry. And when you're reading that information on Credit Karma, you're getting that email saying you've had too many inquiries, don't be worried about it. Don't be stressed about it. The car loans, auto loans work exactly the same. So when you go to that car lot and they pull your credit report through all different lenders to get you the best interest rate, still counts as one inquiry. So today we learned a lot about scoring models, which ones are out there, which ones we use for the mortgage companies. What is a deduping period and why is it so impactful and important to understand that? Because it gives you, the consumer, access to shop around to find the best loan or best company, best person, best rate, whatever you're looking for. And we understand shopping for mortgages is challenging. People believe you always look for the lowest interest rate. That might not be true because generally speaking, there's a inverse relationship between what your interest rate is and your closing costs are. So the higher your closing cost score, the lower your interest rate. The higher the interest rate, the cheaper the closing costs. So sometimes it's very hard to shop around between mortgage companies to mortgage companies to understand. But do know what the deduping period is. Do your research so you're well educated when it's time for you to become pre-approved and purchase your first home. I hope you learned a lot today here at Mortgage Specialists. We do these weekly videos called Mortgage Matters in Minutes. That's our goal, is to keep them short, sweet, and to the point. Feel free to like and subscribe us at YouTube at Mortgage Specialists LLC, and we'll see you all here next week. Have a great one.
Mortgage Specialists. Driven,
trusted, reliable.